Hello family, welcome to NjokaFx. I'm so excited bringing yet to you another video to enlighten you, to encourage you that the market will always give you opportunities to cash out something for yourself. Okay, so I'm going to break down for you how, if I didn't take the trade, but if I was on the chart, I would have taken that trade. Okay, so I will break it down for you so that you can learn and be able to implement it in your subsequent trading in the nearest future. I hope you are having a wonderful week, and let's go into the chart. All right, today we are going to talk about the three levels of rise, three level of 25s, and three levels of rise to the high of the day. And we are going to also add our entry, which was through Tweezer. It was through Tweezer top entry, a Tweezer top pattern entry. Okay, that's what we are going to basically talk about today. All right, so let me go into the chart and explain it to you what, if I was on the chart, I would have been looking for, and I expect you to see the same. Okay, so let's go into the chart. When I get to the chart here, the first thing I do is I mark out my levels. That's the first thing you need to do. Mark out your levels, your weekly level, your daily levels. That's the high and its low of the day, the high and the low of the week, the high and the low of the month. That is the first thing when I get to the market I do. Any other thing comes second. Okay, maybe sometimes I don't literally draw the lines, but I know that this is the levels. Okay, so here we go. Here is our high, the high of Friday. Here is our low of Friday. Okay, and if you look carefully, you are going to see that this high, we have triple touches at this high, giving us equal highs. Because if you zoom in correctly, look at this. If you zoom in correctly, this high was not touched here. It wasn't touched here. So there is liquidity at this particular area. So getting into market and seeing this, I now know that the market will likely be pulled or be drawn to this level because there is liquidity at those particular areas. Okay, there's money to be made at those areas. So let's see how many pips they got. People here, they got 18 pips. 18. Okay, a lot of those who sold on Thursday are going to be putting at break even somewhere around here, and those who are they are going to be stop haunted here for breakout traders. So that is what I wait for. I wait for each of these levels to be broken. If it breaks, if one of them breaks, then I begin to concentrate more on the market. When the high of the week is broken, I concentrate on the market more. The low of the week broken, I concentrate on the market more, because those are places where a lot of traders begin to stack in their positions. Breakout traders, long traders, they start getting into the market. Here is a breakout that failed. Okay, now the breakout traders are going to be putting their positions in place. Okay, putting positions like, let's say, they are going to be on the 15 minutes. It's much more better. Okay, you see this candle closes above the liquidity. It grabs liquidity on this 15-minute candle, then pulls back, closes. Then a lot of people are going to be entering their positions at this particular level. A lot of positions are going to enter at this particular level. Then their stop losses are going to be down here. Okay, this is how their stop losses are going to, like, even up to this level. All right, so the market now will, as manipulative as the market is, they were going to manipulate you in thinking they are going higher to go and fill this gap over here, to fill this area, to fill the whole of this area, you know, but they are not going to do that, just to make you get into and take your money. All right, after this has been broken, what am I looking at? It has been broken, but before it breaks, I'll be looking at how the price action, how the candles are being formed. Okay, when before my session begins, I'll look at what the candles are doing, the price action itself. What is it telling me? Okay, coming into the market, you discover that, look at it, this is where the market opened. This vertical line, okay, this vertical yellow line, that's where the market opened. Look at it critically. This is our, yes, our 00 level, 00 level, and yes, our 0 level. So basically this is our 100 pip box. This is our 100 pip box. Okay, 199.4. This is our 100 pip box. Okay, so it opened here at the 50, almost near the 50 level. This is the 50 level here. It opens at the 50 level. Look at it very well. This is a 25 level. This is 00 level. This is another 25. So this is our 3 levels of rise. This is our first level of rise. Yes, our second level of rise. And here is our 4th level of rise. Okay, following Stacy strategy. Okay, that's our 3 levels of rise. Three levels of rise, 75 pips rise. Okay, so we have 75, 3 levels of rise to the quarter level, just above the 50. And Stacy usually says 25 to 50 pips above the 0 level is stop hunt, and we can see it here very clear that 25 above, almost getting to about 40 pips above the 00 level, which is our stop hunt. Stop hunting this relative equal highs here from Friday. Okay, so seeing that we have broken, another confluence that we have is this. During the gap time, this is my gap time, this is Asian ending, this is New York 2 a.m. starts. As I told you, my session time, my trading window time is 2 a.m. to that's my London session, 2 a.m. to 5 a.m. London session, New York time. Okay, and 8 a.m. to 11 a.m. that is my New York session time. Okay, that's when I concentrate the highest when I'm trading. All right, so yes, our gap, Asian ending, then London begins. Yes, our gap, getting to this peak, the high, we have 3 pushes to the high. First push, second push, and third push. Okay, 1 pull back, 2 pull back, 3 pull back. It started from the gap. Okay, the gap, it started at the gap. All right, so here is our 1, here is our first push, second push, 1 2 3 3 levels of rise with a 1 2 3 push to the high. Then we have 3 push to the high. Then tweezer, our tweezer top happens just after the 25, the quarter level here, the 25 level here. It happens after, just above the 25 level. We have our tweezer top. These two candles is our tweezer top. All right, so we enter, excuse me, we take our trade like this. If you want to enter immediately after the candle closes, you enter there like that. Then first take profit, maybe first take profit here, first take profit here. That's a 1 to 3.2 second or second here. Then the next take profit down here. Okay, so there we have a 1 to 5.5. okay, this is for the entry directly after the tweezer is created. Then the next candle, which happens at 4:45. Remember, Stacy always tells us timing is the key in the market. It's one of the major things in the market. There is price and time, time and price, price and time. So we have seen it has created, this is our candlestick pattern, a tweezer top. At which level? At the 25 level, at the quarter level, just above the 00 level. Okay, so getting that one. Another way one could have still entered this trade is because, okay, for example, why should I give another way of entry? Because for this particular person, entering immediately after the tweezer top has been formed, you discover that he's going to get into heat, you know, heat for almost how many pips? Let me see, for 12 pips, almost getting to hit his stop loss. So with that, somebody can even close the trade. You understand? Yeah, someone can even close the trade that no, it's not going as planned. But see, there's another way of taking the trade. This next candle opens, pumps up, pushes up to take liquidity at this high, pushes up, then reverses back. Then you can enter at the 25 level, at the quarter level, exactly at the quarter level. Seeing this rejection, you enter immediately at the quarter level. When it's getting here, you enter here. As you enter here, that will give you a different RR. Like here, you cannot decide to put your stop loss at the pin, that pin, or the body, this previous candle's body. All right, then now you can now ride it to a 2 point something, you know. Or another person will have still taken this here. When it starts showing this bearish full body movement at the low of this candle, you take it there, you put your stop here, then you target your 51 pips like that. Then you can let the rest ride on. Okay, so that is how I would have looked at the market. I would have taken the trade like this, and maybe I would have gotten a loss here, because you're going to see 1 2 3 a pin engulfment. Take the trade at the at this level here. Let me be realistic. Take the trade here, then you are taking out, you lost. Then look at this one, you gain this one. So that's how trading is. Okay, 1 2 3, taking the high of session, the high of Asian at what level? At 3, at 3, which is the equity hour, which is still not bad. A good trade with good analysis and, you know, following your strategy and all like. Okay, so there's no guarantee. Okay, just trade your setup. That's all. Trade your setup. You have a setup, plan, trade it. All right, so that is it for the day, and that is it for the day. It went right down, and this was also a beautiful trade for those who use price action. Everybody use prices action. For those who use point of interest, you know, this is a zone. It came here, it gave a beautiful reversal. It gave a morning star on the 1 minute. Morning star, here we are. Here is a morning star. Yeah, here's a morning star. You take it up. Okay, so that was the beautiful trade. Let me recap. Okay, let me recap. As I earlier said, when I come to the chart, the first thing is that I mark my previous week high and low. I mark my previous day high and low. I may not put that on the chart, but I can see it because I've practiced and I can, you know this is the level, this is the level. Okay, so or on my MT4, all those levels are drawn there by an indicator. All right, so I come to the market, all those levels are there. Previous day's high, previous day's low. When it breaks, that is where I concentrate more in the market. Any trade I take inside the range of the previous day is only a short-term trade. Maybe I'm going in for a scalp of about 20-25 pips to get out, or depending if I'm taking it, maybe that scalp, but on 1 minute. All that depends. Okay, so that is it. When it breaks, I stick. I now look for my candlestick patterns like this tweezer top. I look for my M and W patterns. I look for my head and shoulder. I look for my 3 peaks to the high, 3 peaks to the low. Yeah, those are the things I look for. Okay, yeah, those are basically the things I look for. Pin bar engulfment, you know, what again? Those are the things I look for my entries. All right, so guys, that is it for today. Have a wonderful trading week, and may the market be with you. Peace.